Welcome to The Extra. Thank you so much for being with us on UBC TV. I'm Robert Chirabo Nyonyi Ntono, and this morning I'm going to be focusing on investing in Uganda's capital markets. Well, have you heard of capital markets? What are they? And why should you invest in Uganda's capital markets? Now, this morning, I have a lady and a gentleman who are good at what we are going to be discussing about. And join me without wasting any minute. Join me, welcome the CEO, that is Chief Executive Officer, Capital Markets Authority, Josephine Okwil Osia. I hope I pronounced it right.
Absolutely.
Good morning and welcome to the studios.
Thank you very much, and I'm glad to be here. Good morning, viewers.
And at the extreme end, I have Paul Buiso, who happens to be the Chief Executive Officer, Uganda Securities Exchange. Paul, you're most welcome.
Thank you. Good morning, viewers. Glad to be here too.
To begin with, Josephine, when we talk about Capital Markets Authority, what do you do? What is this all about? What's your mandate?
So thank you very much. So Capital Markets Authority was formed by an Act of Parliament in 1996, and majorly it has its mandate is around one, developing the market and ensuring that there's orderly activity in the market, and ensuring also that we deepen the market by introducing new products. The other function we do is we regulate and supervise. So what we do, we for the licensees, we bring them in by licensing them, and then while they are in the market, we supervise them and make sure that the market conduct is not unfair and that there are not any malpractices. And then also we do manage the investor compensation fund, as well as carrying out public education, public awareness for the investors. So all these processes involve, for example, approval of offerings of securities. So if someone wants to offer a security, they'll have to present to us a prospectus or an information memorandum. And securities really are either shares or bonds. And so they have to present that to capital markets. For us, just to make sure that the investor is protected, they have provided all the information that is required for the investor to make an informed decision. We also, as part of our supervision, we look at market integrity to see that things like insider trading are not happening. So we monitor market conduct on a daily. And all this is geared towards protecting our investors. And for those licenses that breach the rules and regulations, it's also our duty to enforce sanctions as per the rules and regulations. And maybe just to backtrack a bit, it's also our duty to put in rules and regulations that guide the market. So we provide that framework that guides the market. And then, of course, the other one is also around corporate governance, ensuring that our licensees are following the correct corporate governance principles. And all these things that we do really is around protecting investors.
Mm-hmm.
Yes.
Now I love protecting investors, but for our viewer, when we talk about capital markets, one may ask themselves, what are capital markets?
So capital markets are really a market where financial products are sold. Mm-hmm. And when we talk about financial products, we are talking about either shares or bonds. Yeah, and it's just a market where those who have excess money are going to meet those who need the money. If I want to put it that simply, it's just how you go to a market and one has tomatoes and you want to buy the tomatoes. So the capital market is really where people are looking for money. Those are now the businesses that are looking for money. But then you have the investors who have the money, who have excess money to put. So that is really what the capital market is about. And there are two types of capital markets. So you have the primary capital markets, and this is where securities are being offered for the first time. So for example, let's take an example of MTN IPO, the initial IPO, when they offered, MTN itself offered shares to the public. That is a primary market activity. But now, when now me as an investor, I hold MTN shares and I want to sell it to Robert, that is now a secondary market where we are exchanging between investors. We are exchanging the shares, but when the original issuer is giving out to investors, that is the primary market. But now when investors are now exchanging within themselves, that is the secondary market. So those are the two types of markets.
Then because there are words that are going to be very prominent in this discussion, shares and bonds.
Yes.
Now bonds.
Bonds is like a debt. Bonds is a debt. And basically what the person who's issuing a bond is saying, give me money, I will give you a return, which is an interest, and I will pay you this interest over a certain period of time. So give me this money, for example, for 20 years. And I'm going to be paying you interest at certain intervals, either it's 6 months or annually. So it's a debt. At the end of that period, they'll pay you back that money. So those are bonds. But for shares is now an ownership in a company. You're taking a part ownership of that company. So when that company does well, you get dividends. Yes. And also, if that company continues to do well, the value of that share will appreciate. So you'll also get value. So for example, you buy a share at 100 shillings. 5 years down the line, that company has been doing well, the share has gone up to 120 shillings. So you get that appreciation as well. But also during that period, the company is sharing the profits with you. And those are the dividends that you get. But owning a share means you have part ownership, and that means you can also vote. You can vote for who can be a director in that company. At the AGM, you can also vote who the auditors of that company. So you're part of the decision making of that company, as opposed to a bond. Yes.
A bond you just borrow.
Yes, someone has just lent you money and then you pay them back and they move. They don't have any control in your company. But when you have a share, you have some level of control.
Now, my viewer, you must be very careful because I'm dealing with people. You'll hear shares, bonds, this, that, terms here that you must understand very well. We are talking money. Serious money. We are talking investing. Serious investing here. We are talking of, I'm just enjoying the discussion. You know, when you're discussing anything to do with money, I don't know, there is a joy that money and these issues we are discussing bring on you. And I hope you're having the same now. If you have the surplus, you're thinking of why not buy shares, why not buy bonds, but have the experts here. And now let me go to a poll that is from the Uganda Security Exchange. First and foremost, Paul, thank you for being part of the show, but also help us understand when we talk about Uganda Security Exchange. Yes. Now, what is your mandate? Which security here, the exchange? Yes.
Thank you. And so as Josephine mentioned, we are a securities exchange. And as she mentioned, there's the primary market and there's the secondary market. Now, USC is a principal stock exchange and we're a secondary market. So this is a
Please,
platform.
Paul, as you're discussing,
yes,
simplify these things. Some didn't do economics, no entrepreneurship, no. So simplify.
Okay.
I don't want to leave anyone because with electric media, it's instant communication. Someone must understand that.
So a stock exchange is a market. I would define it like any other market, say Kalere market. If you went to Kalere market, you can find onions, tomatoes, among other things. But a securities exchange, which is a marketplace, you find financial services or financial products. Here you find both equities, which Josephine defined ably as a unit of ownership in a company, or securities in terms of bonds. Now, the products you're actually buying and selling on the exchange are stocks or bonds. Now, what we offer as a secondary market are a couple of things. First and foremost, we are approved and licensed by the Capital Markets Authority. Based on that, we also have what we call stock brokers. Stock brokers are the intermediaries that are required to, authorized and licensed to participate in the stock market on behalf of the investors. So they buy and sell shares on behalf of investors. They also provide financial advice, but they're also the experts within the ecosystem that work with the stock exchange to ensure that investors can look for the opportunities within the market. Now, when we speak about products, if I went to the different markets on the exchange, we've got the equities market, The equities market currently has 19 companies listed, and you must look at the companies as a product. Each of them is a product. So if you refer to MTN, Airtel, Umeme, you're looking at Stanbic, Holdings, NIC, among others. All those are individual products. So if you're buying that company or a share in that company, then you need to understand the nitty-gritties of not only the industry, the management, but the sector they are in and how they are performing. So as an investor, you look at how they've been performing probably the previous year, and you review their financials. You look at how management has put in place strategies that can help the company grow and make more money. Because there are two areas one makes money in the stock exchange. One is through earning a dividend if the company performs well on an annual basis and pays a return to investors. The second is through what we call capital gains. As mentioned previously, Josephine mentioned that as the company performs well, so does the value of its assets grow, which means that you can get a better capital gains return in that company by selling the shares on the exchange. And that is the facility the exchange provides. We work within rules and regulations so that we have an organized marketplace to ensure that within that space investors are protected, but also investors can take the comfort and confidence that if they buy a company, all the disclosures, because our market is disclosure based, we make sure all information is provided to the public and investors to ensure that they can make informed decisions in a timely manner. So those are the two ways you can make money off the exchange. Of course, if a company is not performing well, what happens is that the stock price will reduce. So you can end up losing money if you sell at a lower price. But also there's a term, and I don't know how to use this term differently away from the technical. There's what we call a realized and unrealized gain or loss. So if you bought at a particular price, if you don't sell when you're in the money, yes, you've got a gain, but you've not made any money out of it. If you actually sell, then you actually have a realized gain in your bank account. Same thing as the loss. If the price goes down, you have an unrealized loss. If you actually sell, you end up getting a loss. So we as the exchange, we ensure that the members, the listed companies, and all the stakeholders, because as a platform, we bring everybody together. They follow those rules that have been approved by the Capital Markets Authority, and we are really what we call the first line of defense in terms of investor protection.
Well, very interesting. Still discussing money. You to understand these things better so that you're not fleeced. You know, someone will tell you you're doing this, that. We have smart Ugandans. Now we have the oath mouth, the very people who are telling you now. This brings me to a question, Josephine. Why should I invest in capital markets? Why I'm here, I have my money, fine. Why should I think of investing in capital markets?
So thank you, Robert. There are a number of reasons why you should actually invest in the capital markets. First and foremost, it's a form to diversify. I know that most of us Ugandans, when we think investment, we think land, we think houses. Rentals, you're chasing tenants and all that. But capital markets gives you that opportunity to invest in something else that can give you a return without you necessarily putting a lot of effort in it. So someone else is doing the work for you. So basically the money is working and you're earning. Yeah?
These days we say if you're able to earn while sleeping,
yes,
then you know you're rich.
Exactly. So that is the kind of earning you earn while sleeping. You put the money there. If the company is performing, you get your dividends without you having to chase a number of people around. So that is the first thing. It provides you diversification, an alternative of how you can earn money. And as you know, any investment can go bad. So it's good to spread your investments. So put some in land, put some in capital markets, maybe have a small kiosk. But all that is just to make sure that if one is not doing well, the other one could be doing. So diversification is one of that. Secondly, there's a potential for high return. And as Paul said, if companies do well and they're paying you profits every year, you're assured of that cash flow coming through. And also and the value goes up, you have the potential to also reap from the capital gain, of that shares. But even for bonds, the bonds also, you can have an opportunity to invest when the rates are high. And things like bonds actually help to cushion you against things like inflation. So once you put your money there and you've agreed a return that you're going to be paid, whether the inflation runs away, your money is secured and you know that that return is guaranteed. So even if, for example, even if the economy may not be doing well, but you've already locked in that interest rate that you've locked in at that point. Secondly, the capital markets provide you some form of liquidity. So you have a share, you have a bond, and as Paul talked about secondary market, you can sell those shares or those bonds in the secondary market when you need some cash. Now let's compare that to you have land and you have a house and you have a pressing problem. How long will it take you to sell that land?
Some good time.
Yeah, it will take you some good time. So it provides that form of liquidity. And of course it gives you income. But I think the other thing is that you start to have ownership, particularly for the shares. You have ownership in businesses. Like now, you can boast and say, I have a share in, say, Stanbic. I'm an owner of Stanbic. However small your share is, you're an owner of Stanbic. You're an owner of MTN, Airtel, or Cipla. So you can also now boast and say, me, I'm an owner of a company. Yeah, you don't have that big money to start the company, but by buying those shares, you then get an opportunity to own. But also capital markets help with economic growth. As you see that government comes to the capital markets when they're looking for money for infrastructure, money for projects, money even just to run government. So you participate in that aspect as maybe you could say as a patriot. You're giving the government money to encourage economic growth.
So when government needs money, it comes, borrows this money.
Yes.
Then of course it returns with interest.
Absolutely. So the treasury bills that they keep they keep putting out, and even the corporate bond, the bonds, the treasury bonds that they keep, that they're collecting money from the public to support economic development. And now with the 10-fold growth strategy that government has, it's even more important for us to support government by coming to the capital markets and participating. And there are also some tax benefits that you get from investing in capital markets. So for example, recently there was a law that was passed around private equity. And private equity is really private funds, yeah, where you're investing private funds in a private company, and they were given tax exemption. Also, when you invest in government bonds above 10 years, the withholding tax is reduced. So you only get you're charged a withholding tax of 10%, as opposed to say when you say fix your money in a bank, they will take away 15% withholding tax. So there are some of those advantages of tax that also happen. And then capital markets are global. And now, for example, in the East African region, we have cross listings that are listed on the Uganda Stock Exchange, Nairobi Stock Exchange. So you can actually go and buy shares, get ownership of a company in Kenya. So you start to get international, you get regional. Yeah.
Very interesting there, international, regional, but also knowing that you get to own businesses and you get to make money while you're sleeping. Then you know you've attained some level of wealth. So these are there for you, and they are regulated by the government of Uganda. Allow me to go for a short break now. When I come back, Paul will be telling us what is the role of Uganda Security Exchange in helping accessing or assessing capital markets. That is when we return. A short break.
Live from UBC studios in Kampala, this is Good Morning Uganda Extra.
Juko.
Yo.
Wachikuwa. Check the shopping, man. What's your secret?
Uganda, haven't you heard of the parish development model PDM?
Yes, I did, but I thought it was just a talk.
No, Sebatia. It is real. I and a few friends together formed a circle, accessed money from the PDM, invested in a poultry project, and now things are moving.
Joko, I thought I was one of your friends.
You are,
But you left me behind.
I didn't leave you in poverty. What you do, just visit your LC2 chairperson and your parish chief, and start the process of economic transformation. Just like that. The parish development model is an initiative from the government of Uganda through the Ministry of Local Government, designed to transform all lives of Ugandans for the better. PDM, my parish, my development, my life.
A new dawn on Behind the Headlines with me, Timothy Nyangweso. Every Wednesday, live in our studios in the heart of Kampala. We have conversations that have analysis, explanation, but not every truth is fact, and not every fact is truth. Every Wednesday, 10 p.m. on your public broadcaster.
All on your public broadcaster. UBC, inspiring Uganda.
The East Africa UK Tourism and Culture Expo 2024 is here, happening on 8th and 9th of November 2024 under the theme Enhancing Tourism as Engine for Social and Economic Transformation on the sidelines of WTM London at the Rembrandt Hotel, 11th Thalo, PI South Kensington, London, SW7 2RS, United Kingdom. For tickets, exhibitors will pay £1,000 and participants will pay £300. For more information, call +256 787 096 100 or +254 795 806 969. Visit www.eauktourismexpo.com to register.
Live from UBC Studios in Kampala. This is Good Morning Uganda Extra.
Thank you so much for being with us on UBC TV. We are still looking at investing in Uganda's capital markets. And with me, I have the CEO, that is of our Capital Markets Authority, Josephine Osia. And I also have the Chief Executive Officer, Uganda Security Exchange, that is Paul Buiso, with whom we are discussing these issues. Now, Paul, help us understand how Uganda Security Exchange helps people access capital markets.
Thank you, Robert. So one of the ways is for companies to raise capital out of the capital markets. So what is required is that if a company does not have enough money or needs to invest, one of the alternative ways of raising capital is to come to the capital markets and look at both the bond market or the equities market to raise capital. Now, the bond market is where you've seen a couple of corporate bonds issued, and as Josephine mentioned earlier, a bond is an instrument of debt. It's not any different from the one in a bank, only that it is structured a little different in the sense that if a company wants to raise money, it looks at more of its disclosures and provides all information about it to the investing public, and the investors look at whether they would like to put their money in the company, and then they issue these. We've seen a couple of companies raise money off the exchange. The last bond, which was a corporate bond, was Kakira Sugar, which raised about 75 billion in 2014, a 10-year bond, and the interest rate was at about 14.67%, and major institutional investors participated in it. So that is a little different from the usual, and what happens is that the company is able to pay the principal at the end of the term or maybe 3-4 years before, as opposed to having to pay the principal interest at the beginning of the issuance of the loan. The other way is through what most people know, the initial public offers. Initial public offers are really where a company would like to raise money and comes to the investing public. If you have about, let me use the example of MTN. During MTN's IPO, they were trying to raise about 880 billion for selling 20% of the company. They were able to raise 535 billion in the first offer in 2021, which was about 13.2% of the company. But recently they came back onto the exchange and were able to raise the balance 7% in May this year, where it was oversubscribed 230%, and we saw investors participate again fully. During their IPO, over 21,000 investors participated, Ugandan investors. And one of the things we provide as the exchange is the technology and the facilitation to ensure that companies can raise money as quickly as possible. So we use technology, and investors can access that through the Momo channels and also Airtel Money now, because similar to that, through the Airtel IPO, the same processes were undertaken. Now, for companies, the difference between raising money from a bank and from the capital markets is that you have to put in place a prospectus. Prospectus tells the story all about the company. In other words, you look at its history, its directors, who's running it, its financials, the history of how it's been performing. It provides the risks of the sector. It looks at the sector in detail and also forecasts the growth of the business. And then an investor comes out and makes an informed decision on whether they will participate. Of course, that prospectus is reviewed by the exchange and approved by the Capital Markets Authority to ensure that all the information provided has been verified and is accurate to the best of in other words, to provide comfort on the transparency of the company. So once that is done, they go into the market, look at what we call both institutional investors are really the pension funds that hold members' money, and those really play a key role in the success of these transactions. So for the success, a company, the institutional investors have expertise to review these companies at detail, and once they make a decision to participate, usually you see the retail offer following suit. So that's one of the ways we've seen companies raise money, and to date 2.3 trillion has been raised by the 11 local companies on the exchange, which is a testament that companies can actually use this as an alternative model to raise patient capital, because you don't have to pay interest right away, but you can pay a dividend and invest the money in the right assets to grow the company.
Now this brings me to Josephine. You've talked about the good. Now I want us to look at challenges businesses face in raising the capital, because this is the gist where we are talking raise capital, then this. So what are some of those outstanding challenges?
So there are a number of challenges that businesses can when they're trying to raise capital. And I think the first one is businesses must know that there are regulatory and compliance requirements, and they must adhere strictly to these regulatory guidelines when they are raising capital, especially from the public. So sometimes navigating through these legal requirements and frameworks, filing prospectus, meeting financial disclosures can be costly, and it can be time consuming. So that is one of the things. Secondly, the market conditions. Our market conditions can keep fluctuating, investor sentiment can change, and that can create a bit of volatility in the market for those who want to raise capital. So for example, during economic downturns, you'll find that investors are more risk averse, so they are not willing to invest, to put money, and therefore there could be less liquidity in the market, and therefore finding it hard for the businesses to attract any funding. Then the other one is access to investors. So particularly I'm talking about the small, medium enterprises. These SMEs do face a bit of challenges in reaching the institutional investors, because institutional investors prefer companies that have structures, that have visibility, that have a track record, and this is usually the larger companies usually do have this kind of information, but for the smaller companies, the SMEs who are starting up, you will find that they may struggle because it's a small business, so you find that people might assume them as very risky, and so therefore not want to put their money in that. And then some businesses also, they want to come for money, but they fear dilution of ownership. So because when you come, as I said, and you buy a share, you're now a part owner. So there might be those businesses that want to hold on to the ownership, and they don't want to, they don't want other people to interfere in the running of their business. So it's a mindset where this is my idea, it is my business. So, but coming out to get money from people means you must open up your business. You must open up the business, you must let other people in, you must be accountable now to other people, and some businesses struggle with that. So once you start to tell them about this kind of requirements, then they back off and they opt and say, no, this one is not, I think I don't want to go to that level yet. And then also risk perception. Investors have different risk perceptions of businesses, so you'll find that one business will come to the market and everybody's running to invest, while another business will come and people have a different risk perception of that, and so they will not be willing to invest. So those are some of the things that businesses face. You might provide all the information that you want, but the perception of risk by the investors is negative, so you will struggle. And then sometimes these things are complex. It can be a complex process. Capital markets is not as straightforward as it is, so it needs for you to understand really what kind of structure or what kind of funding do you want to come for? Do you want to come for shares? Do you want to come for bonds? And that's why I always advise businesses, get a transaction advisor. The transaction advisor will be able to tell you which is the right kind of structure that you should put in for you to be able to raise money. So for example, if you come into the market and raise the money, say for example, you're a young business and you want to issue shares, you don't have enough information about the business, you see, all that can create a bit of challenges for you. And of course, I think the last one I would say is it's linked to lack of investor confidence and investors not knowing, lack of investor awareness, so they don't know. So you bring shares and people don't know about shares. Or you bring a corporate bond and the public doesn't know about corporate bonds. And that's why our capital markets are kind of struggling a little bit. It's because of lack of awareness. And so one of the objectives we really want to achieve even from these engagements is to tell people about capital markets, to give them confidence that they can come to the capital markets and invest their money safely. Yeah.
Now this takes me to Paul. You know, we've discussed, seems the elite, some level. I know many people who have money in Ichikuho, we have those that, but I'm also trying to see where are the opportunities for the everyday person who will join this entire thing. If you can take us through, Paul, and try to not be technical, digest it for them to understand, because what we're discussing today seems to be in a certain class of people, yet it offers opportunities for everybody. Yes.
Thank you. Maybe to keep it simple for the everyday person, just look at it as running your small business. You know, you have your kiosk, you bring in your goods, you try to market, you get a return of that. You know your clients, you sell, you get off a small profit for upkeep, you reinvest, you grow the business. The key thing here is track record. Josephine mentioned track record, and both the side of running the business and the investor kind of have to be in harmony for you to make a decision. The key thing is that if you're an everyday person, what business would you put your money in? I'll use the telecoms, because the telecom, we're on phone, we are buying data. You know, the numbers are seen, mobile money, we are exchanging, we're undertaking transaction. The sector is growing, they are investing in it. As a sector, that is an opportunity. So, Omuntu Wabulijjo should be able to say, if I'm spending money, how much money is this business bringing back? If I bought a share on the exchange or in the IPO, what kind of return would I get? These companies have been paying regular dividends 3-4 times. I think we've seen about 7 from MTN, we've seen from Airtel, Stanbic has been consistent. That is where the opportunity is. If the banking, they're giving out loans, they're investing in bonds, they're expanding, their balance sheet is growing. And balance sheet means that the things you put in your shop are increasing. You now can employ somebody on the side to do your work while you're away. That is the growth and the opportunity. Now, going back to the other question of companies that need money, it's track record. Most of the companies, why we've struggled to get companies listed on the exchange, it is track record or internal policy within the companies. Do you have a board of directors? Do they make good decisions? Do you have a long-term strategy in terms of where you want the business to go? Are you investing in the right assets? You know, do you able to pay dividends? Do you pay your taxes? Because once you don't, you cannot qualify. Because these are the simple, small things that, even if you're a small business, as you do that and you keep a track record, all the public wants to know is that, was this person consistent? And if Capital Markets Authority verifies with the transaction advisor that this person is consistent, then the fund managers and the people with cash will give you money. And even then, the investor who's looking for that opportunity will do the same. The other is really for people who want to get into the capital markets at this early stage. They are what we call growth companies, but also mature companies. Mature company consistently pays dividends. It might be priced a little highly, but it's still investing and growing. So I'll give an example. Early this year, Stanbic's price was, Stanbic Holdings price was at about 32 shillings. Now trading at around 53 shillings. That is 20 shillings over and above where it started at the year. What have investors seen in that? They've seen that there's an opportunity. Now the capital gain is significant. We're almost talking about 70, if you take the percentage of 20 out of 33, it's a very good rate of return, up 60 something. If you look at, they also paid a dividend, final dividend, and they paid an interim dividend. Now, companies that consistently pay dividends, you see prices going up. We've seen MTN, it was at about 170, it's now at 205. Those are the signals that the companies in the right sector and investors predict that it will continue paying good returns. And the good returns are the ones that drive the capital growth, especially how money is invested. So, Omuntu Wabulijjo should look for those opportunities. Speak to our licensed brokers. Currently, we have 5. They can visit our website, Uganda Securities Exchange, and find the licensed brokers and take advantage of those opportunities. The other is in the bond market. We also provide bonds off the exchange through an alternative avenue and a primary dealer. Now, bonds offer a fixed return, depending on whether you're participating in the short end, which are the treasury bills, or the long end. You're able to buy these assets and get a fixed coupon. And the government of Uganda pays every 6 months. So this is money you can reinvest. Of course, there are risks with all this, but the advisors are there to guide you on what bond to buy, what treasury bill to invest in, and also what stock to buy. Is it overpriced? Can you wait? Or do you come in at this time? There's still potential for growth. So those are the opportunities within the market. And maybe finally, we've put in place technology. You can use either an app, USSD. It is really at the hands of the investor to participate in the market.
Well, interesting. Yes, yes, please do.
The other product that is available, as we say for Omuntu Wabulijjo, is the collective investment schemes. So collective investment schemes means has people who we call the unit trust holders. So it collects money from different individuals, small amounts, to make a big amount that can be invested easily. And now we have a number of collective investment schemes that have been licensed, and you need just 10,000 shillings. You can invest from 10,000 shillings, yeah, and you'll be able to buy 1 unit of the scheme, and you can keep growing that over time. And so those are some of the avenues for those who are completely new. It's like how you put your money in a circle. and then at the end of the day you earn interest, whatever. But so this one now has a bigger group of people, and you're not necessarily related like how it would be in a circle.
Yes.
So the collective investment schemes also really provide a good avenue, because the collective investment scheme managers invest in bonds and treasury bills, and they also invest in some shares. So depending on your appetite, so they will be able to explain to you, the licensed people who manage these collective investment schemes will be able to break it down for you to suit your need as an investor. And for these collective investment schemes, when you need your money, you can get it back, say within 2 to 3 days. Yeah. So once you put your money in that scheme. So for the people who, as you say, Omuntu wa bulijjo, that's a good place to start, just to test and see and understand how these products work. And as they continue to engage with these people who manage the schemes, the fund managers and the collective investment scheme manager, then they will get a better appreciation of how the capital markets work.
Well, so much talk here regarding shares, bonds, treasury bills, and all that you need to know about capital markets in Uganda. Well, time seems to be flying and we must get out of here. But Monday, we commenced the World Investor Week. Now, beginning with you, Paul, as we plan to move out of here, briefly, let's talk about this week. What events have you had? You know, by the way, why is it also, first and foremost, what's its intention to have this week? Yes, Paul.
Thank you. So this is a global event in partnership with a global organization called IASCO, that is International Organization of Securities Commissions, where Uganda is a member. And what we do is that we come together to provide education and education for investors at large, and also provide protection so that investors can get more informed about the capital markets, the different aspects of the capital markets, the risks, and mention others. But majorly it is to educate. Now, we've had quite a number of events lined up, and this is an initiative we've been doing for quite a number of years, over 7 years. Yesterday we had a launch, a media launch, where we talked about this in detail. In the evening we had an X-Spaces where we talked to the Gen Zs about digital. And the theme this year is tech-enabled financial inclusion. So we've been really focusing on the digital solutions, but also all aspects of the capital markets, not just the collective investment schemes. You're talking about the bonds, the shares, listed companies, stockbrokers, all those players coming together. Tomorrow we will have, and then we are here speaking to the Ugandan public. Tomorrow we have a women investment breakfast, where we'll be speaking to women in businesses, sharing experiences and seeing opportunities they can take from the benefit from the capital markets. Thursday there is a university challenge where there will be different market players speaking to the different universities. And then we'll crown it off with what we call a capital markets roundtable on Friday, where we'll bring everybody into one room for an all-day event where different panels will sit and share experiences, views, a learning point for all. So that is the World Investor Week, and we support it with different partners who within the market who have come together to make sure it is successful. Yes.
Well explained. Please do not miss any of the events where you stand to benefit a lot. Well, time seems to be flying, and I'll just have Josephine give us her parting shot.
So my parting shot to the public is, please do not invest with people who are not licensed by the capital markets. I know that there are a lot of people out there trying to come up with all interesting schemes, but before you put your money in any investment proposal, and please ensure that you check if they are licensed with the capital markets. And you know what, some of the things to look out for from these fake investors is, one, they will promise you a very, very high return, which is unrealistic. Someone will come and tell you you're going to earn 20% a month. Think very carefully, because what business is that is going to give that kind of return? Secondly, there will be urgency. They will tell you you're the only one who hasn't invested. Other people have invested. The investments are getting finished. They will create
time to put in is about to close.
Yes.
If you invest now,
if you don't invest, you're going to miss. Yes. So that kind of pressure, they'll put pressure on you to invest. And then the other one is the business is complex. They will tell you complicated things. For example, oh, we will grow for you bamboo, or we are going to grow for chicken or something, and you're not clear really how the money is being made. So be very sure that you know what model the business is doing and how the money is going to be earned. So for me, those are the 3 red flags that you should always look out for. But above all, you can always go to the website of capital markets. You'll see all who the licensed persons are, the investment advisors, the fund managers, and everybody who's allowed to participate in the capital markets in Uganda. That should be your first criteria. Is this person licensed? Yes. If no, I think you should stay clear. Thank you.
I think, Josephine, when it comes to licensed, recently there is a muntu who are conned massively investing in poultry. If you remember, have you buy shares in this period of time, we take care of them, then you get this amount of money. And a number of my colleagues fell suit to that. More so a number of farmers. We are in a certain group of farmers. And one also called Davis, he works here. He also ended up investing his money that they are that they are rearing chicken for him. Then after a period of time, they are going to give back his money. I don't know how far police has gone with those investigations, but I won't leave without giving Paul at least a minute for your parting shot.
Yeah, just to encourage the investing public to reach out to our registered advisors, the stockbrokers, but also to visit the website of the USC to learn more. There are a lot of resources there where one can pick information, but to advise that in a regulated environment, there are a lot of opportunities. The stock exchange is a barometer for the economy. When you look at the companies that are listed, they are top tier companies in the economy, and they play a core role in not only employing people, but the services and products they provide. So looking at those companies gives you an alternative investment avenue, as stated, where you can diversify and learn and put your money to work for you while you are resting and doing other things.
Well, thank you so much, Paul and Josephine, and above all, our view. We have been discussing investing in Uganda's capital markets, and the truth is, it is a well-regulated industry. But please ensure you deal with licensed people. Someone calls and says, well, if you don't buy now, they are closing, so you need this money. If you buy now, that issue of timing comes in so much, and when people have been fleeced. So please, go to the websites and make sure you're dealing with the right people. Buy your treasury bonds, government will give you a good deal, get the bonds, get the shares, as long as you're dealing with the right people. And also interest yourself to know more about these. Have a lovely day. God bless you.
Live from UBC Studios in Kampala. This is Good Morning Uganda Extra.
Pick of the day on UBC. Was brought to you by
I'll call you every day, yeah, yo, baby, don't go.
You can now get all the Chibuzi out with MTN voice bundles. Call all networks. Kubei Dondoro. Buy a 25-minute voice bundle for only 1,000, or buy any daily voice bundle of your choice. Dial *100 *21# and select daily, or use the My MTN app. When we talk together, we are